Hello and welcome to Commodity Champions, your weekly dose of what's brewing in the commodity space. I am Manisha Gupta. Let's quickly recap the week that was for commodities. Starting with the crude oil prices, which has stolen the limelight this week. The prices fell by more than 5% as OPEC's decision to extend production cuts failed to lift sentiments. The precious metals, though, shown in the week, with gold prices trading at a one-week highs. The weak US dollar actually was aiding the prices here. The silver as well is trading near one-month highs. What is losing luster has been the base metal prices. The iron ore prices fell by 5%, nickel is down 3%, steel is down 2%, excuse me, and the copper prices were the only ones that have actually been trading flat. 0.5% of a gain is what we saw onto that one. Take a look at the metal space, and that is the only one that actually saw some declines, with iron ore prices headed for a third weekly drop. It is the China port inventories at a 13-year highs, which has been weighing onto those prices. The copper prices, though, in the meanwhile, were trading at a 3-week highs, even with those marginal gains because of disruptions in mines in Indonesia and Australia. It is nickel prices which actually saw quite a bit of a decline in the base metal space. They have fallen by 3%, and this is after Philippines ramped up exports to China, taking the glut in China on the higher side, and that is what was weighing onto that space as well. So that was a quick wrap on how the commodities fared this week, but let's discuss more about the crude oil prices and whether there is any hope for prices to rise anytime soon. We have with us David Lennox, who's analyst at Fat Prophets. David, hi, good to have you. It really has been quite a roller coaster of a week when it comes to crude oil prices as they reacted negative to the OPEC decision in Vienna. What is your sense? Did the markets get less than what they were expecting, or the OPEC did not do enough, or there was completely no surprise element from that OPEC announcement?
It appeared to be seeking more guidance, or actually a actual cut in production of the ceiling rather than just an extension of the time. We're not quite sure where the market started to build that view in, but it certainly did. And when that cut wasn't announced with the OPEC meeting overnight, we did see the immediate reaction in the oil price, with WTI unfortunately slipping well below $50 into the $47 region, and Brent slipping to about just over $50 as well. So the market at this point in time is really looking for OPEC to try and deliver, or I should say was looking for OPEC to actually try and deliver a cut in the surplus that we have been seeing that's been running in the market now for some time.
David, that point is well taken, but do you see now further decline coming for prices? Because we've heard views on how the prices can fall further. $45 perhaps can be seen on the charts.
Look, there is a possibility that we could see the oil price continue to drift lower now, primarily on the back of a couple of factors. In the near term, we are seeing US domestic production rising week on week, and at the week just finished, it came in at 9.3 million barrels, and that is a continued uptrend. We're also seeing, even though we are seeing drawdowns, there are significant inventories still inside the US, and it's those two particular events that we think will just keep the oil price drifting lower. Throw in that Donald Trump's administration announced that they were looking to perhaps sell down the US strategic stockpile of, we think, about half, which would come to about 260 to 270 million barrels. And the market potentially has some very strong headwinds that could push that price lower.
David, while the statements from many of those oil producers does sound on how, the output cuts have had an impact, even if that is a bit delayed. But the major worries, would you say, really come in from US, because we've seen them ramp up production by nearly 10% in last 1 year, and the supplies still in the global markets are on the higher side. But would you say that the demand would be the key going forward? Because if the demand is not there, then even with the supplies going down, we perhaps would see prices under pressure.
Look, we certainly think that the key demand number that we will be looking for that's coming up very soon is the US summer when they go into their drive season. We will be looking for that particular season to be a very strong one. Anecdotal evidence that we've seen in terms of employment numbers and confidence do indicate that perhaps we will see that stronger US drive season and a greater demand for petroleum as we go through the summer. So that's the key takeaway that we're looking for in the near term. Other than that, China does still remain one of the other drivers looking at importing high tonnage of oil, and we suspect that that will continue as that country starts to move from being a investment-driven more towards a consumer-driven economy.
David, let's talk about India now. And 86% of Indian imports come in from OPEC members. And Indian oil minister in this week has said that India will have to start looking for cheaper crude, perhaps from suppliers in US and Canada. As OPEC output continues to decline, their exports might decline as well. And the pricing from OPEC, of course, has been slightly on the higher side. What is your sense, Asia and the other major consumers, do you see them looking the other way for more cheaper alternatives here?
Look, we certainly think that if you have a look at what's happening, we're seeing the US, as I said, producing more and more oil. That does mean that the oil that they used to import is now being replaced by domestic. That pushes that export oil that they were bringing into the country back out into the rest of the market. So we do think that for the time being, some of that demand that's coming from other countries will actually be satisfied by the oil that's no longer going into the US. However, in due course, if India does continue to expand at the rate at which it is at the moment, we would expect that they would start to look for alternative sources. And one of those sources potentially could be a domestic US import of oil.
David, what is your sense on the prices going forward from here? Because we have seen a high volatility into prices last fortnight or last 1 month. If you look at on the charts, we've seen multi-month lows and multi-month highs come in for the crude oil prices. There has been a lot of reaction, of course, as the markets were getting into the OPEC meeting here. But there have been lots of factors in play, haven't there been? Because you have US on one side, you have Chinese demand on the other side, and of course, the way Europe is headed. And then there is Russia election this year as well, and the Saudi Aramco listing IPO also would come out this year. So there is perhaps a lot of stuff which the crude oil prices would want to look at. How are you looking at the very near end, rather this quarter, and what is your sense by this year end on how we will see the crude prices ending with?
Look, we were a little bit surprised by the market reaction overnight, so that's driven the price a little lower than we would have thought. But towards the end of this year, and certainly by calendar year end, we'll continue to call a Brent price of about $68 to $77 by calendar year end, and also a WTI price of between $65 and $75 US by calendar year end. So we're looking for this upcoming drive season in the US to be a very good one, and that we believe will start to certainly rein in, if not turn to a deficit, the surplus that we've seen in the oil supply market at this current time.
All right, then, David, we will watch out for those levels. You slightly are bullish onto that commodity. We haven't really had that kind of feedback from many analysts, but crude prices really is something that is a moving target as of now, depending upon the demand and supply from many of those producers. With that, it's time for a break. But up next, we have John Joseph, who's Chief Commissioner Customs at JNPT Mumbai. He will be joining us to talk about the role of ports in transport of commodities, ease of doing business, and much more.